Hey everybody, welcome to another market update with Lewisburg. I'm Marcel LeBlanc and I'm here with Dan Robichaud, portfolio manager for our US and international equity mandates. Dan, how are you today?
I'm good, thank you.
Good. So Dan, can you walk us through 2021 as a whole and more specifically the end of 2021, how the year has ended up for markets and performance?
Yes, Marcel, thanks. Clearly, I won't surprise anyone by saying equity markets has performed exceptionally in 2021. If you look at North American equities, they delivered over 20% return. International equities delivered double-digit return. So clearly a lot better than I would have anticipated 1 year ago.
Yeah.
Um, if we look at last quarter in general, what we've seen is equities resumed their upward move. So we had solid returns, mid-single digit to low double digit in the US. Volatility was a little more elevated. And that started with the uncertainty from the Omicron variant that we saw. And as we got more data through the quarter, and it became clearer that the risk of severe disease was a lot lower than its predecessors, the markets quickly recovered through the quarter.
Right.
One thing we did pay a lot of attention to was corporate earnings. So, as you know, we've talked a lot about supply chain issues, labor shortage, and one big question mark was when will this show up into corporate earnings? And really, except some retailers, the answer is we didn't see it yet. We see the recovery in earnings remains really strong, and that keeps supporting the equity valuation.
Awesome. So could you walk us through our perspectives for 2022 and what we might expect from markets in the year ahead?
Yes, so clearly when you invest in equities market, there's always uncertainty. When we think about 2022, it's clearly not an exception. There's a long list of things that investors are worrying about right now. So if we think of the supply chain issues, the labor shortage, and elevated valuation, that remains a theme. But also now you can add on top the Chinese economy slowing down and central bankers around the world looking at tightening their monetary policy.
Sure.
I would say that monetary policy is the biggest change from last year and likely gonna cause a lot more volatility than what we experienced last year. Clearly, that's what we're experiencing so far in January, and we would expect that to continue this year.
Okay.
In general, we take a really more balanced approach around the outlook. Right now, we feel it's a good time to be more neutral around equities, so we would encourage investors to be more in line with their investment policies.
Sure.
It's just a much more balanced risk-reward proposition.
Sure.
I would say we do have a preference in terms of different markets. So if you look at Canada, it's a market that's really exposed to energy and banks, right, and is seen more as a value market. I just think the conditions are a lot better right now for this kind of exposure. So we would expect Canada to do better in general, and it has become more popular recently. International markets, we also have a preference just because it's a well-diversified across sectors, and valuations are a little less demanding than what we're seeing in the US.
Okay.
If you look at the US market, as you would imagine now, we're a little more negative. The exposure in the US is a lot more concentrated to a few specific sectors, and valuations are a lot more elevated. So we just don't think it's a good setup currently with monetary policies set to tighten through 2022 for the US equities.
Makes sense. So before we end here, is there any other message that you would like to share with investors who might be looking at the news and curious about their portfolio's performance going forward?
Yeah, so I know a lot of investors are wondering about the recent volatility. I think my message would be there's always uncertainty, and this is not changing. I want the focus to be on the long-term objectives. So that's what we want to communicate to our investors. We've got professionals here making sure your IPS are built to meet your objectives. And we know that trying to timing the market is most of the time destroying value and not
Sure.
creating value for you.
Mm-hmm.
Our funds are well diversified. We think we should perform well in this kind of environment. And so far, year to date, the performance has reflect that.
All right. Well, thank you very much for sharing your thoughts and perspectives with us. Until next time, see you guys.